Dave Bartol.
And we are JD Homes Group, and we're so excited to launch our new Local Expert Series. So today we are going to discuss one of the most important parts of the buying process, if not the most important part, because guess what? If you can't get a mortgage,
You can't buy a home.
You're not buying a home. So today we are going to speak with the amazing, incredible Gary Marino with Guaranteed Rate. Hey Gary, how are you?
Wonderful. Thanks for stopping by, guys.
Thank you for being on our show today.
Yes. Before you actually go looking at a house, it's a good idea to get pre-qualified with a mortgage broker, because then you know for a fact what you can afford and can get comfortable with what your monthly payments will be, including HOA and taxes.
If you're interested in buying a house, get yourself pre-approved. It's it's like asking the doctor to write you a prescription before getting examined. You need to get examined.
Yeah. Good
It's
analogy.
free. It's painless.
You're going to have to do it anyway before you put in an
Yeah.
offer, so let's just get it out of the way. If somebody calls you up today and they said they want to get pre-approved, what is that process like?
Well, it's an awesome process here at Guaranteed Rate. We have a digital mortgage application where the buyer can go online. It takes about 15 minutes to fill out the mortgage application. It's exciting as you get to run your own credit, and you get a pre-approval letter. I'm notified when you start and I'm notified when you finish. I can get you pre-approved within 15 minutes and have all the information we need to submit to underwriting for approval the same day. One other thing.
Yes.
Don't pull my credit. I don't want my score to go down. Okay? I hear that a lot. It's common. I understand it. If you were going out and you went to 10 banks and you have good credit and you went to 10 banks and you applied for 10 credit cards, that would be a red flag that you need money and you might get approved for all 10. With a mortgage, the credit agencies know you're only going to get one mortgage. Okay? If you go to 5 mortgage companies within a couple of weeks or 45 days and you have your credit pulled by 5 mortgage companies, guess what? It's one inquiry. Okay? So the credit agencies aren't stupid. They know you need to have your credit run. You can't have a soft pull. You need a full pull. It's what it is. If you're buying a house, that's what you need to do.
So Gary, what if I don't have 20% down? Can I still buy a home?
That's a great question, Jen.
Yes, it is.
Yes, you can buy a house with less than 20% down. There are VA loans. If you're a veteran, you can put 0% down.
I'm not a veteran.
Okay.
What's next?
We can do some conforming loans, depending on how much money you make, where you can put 3% down. We have FHA loans where you can put 3.5% down, and conventional conforming loans where you can put 5% down. You could put 10, 15, or whatever number you want, which is greater than that.
So is it going to cost me more in the long run if I don't put 20% down? How does that work?
Absolutely. So with when you put less down, you're going to pay what's called PMI, okay, which is private mortgage insurance. The PMI is based on your credit score. It's based on what percentage you're putting down. And the type of property. So it could a condominium or a townhouse and a single-family house or a two-family house are all going to have different PMIs. It doesn't really affect your interest rate per se. It's more going to affect your monthly payment.
So
And
it's an additional charge in addition to your
it's
mortgage?
going to be a percentage of the loan amount, and that percentage is determined by your credit score and how much you're putting down. I'll give you an example of one I just quoted this morning.
Great.
Which is a $600,000 purchase, 10% down, very strong credit and strong income. And so they're putting 10% down. Their PMI was $99 a month.
Okay, that's very helpful.
Now that, when it's not an FHA loan, that will go away when you reach 20% equity in the property. Another issue with condos, which you need to know, condominiums require condo review documents, okay?
Right.
And there are limited reviews and there are full reviews, okay? If you put 10% down when you're buying your condominium,
They're going to do full review.
No, you can do a limited review. If you put 5% down, it's a full review.
Okay.
And the full review may put your purchase in jeopardy because it's like getting a full examination at the doctor. They're going to find something wrong with you. A limited review is one sheet with 20 questions, and they know how to answer it. With the full review, it's the budget, it's every line item on the budget. It's just a more arduous task to get approved. So if you can, at all possible, that 10% down for a condominium is a nice little kicker. Not that I do 5% all the time. It's just a bit more work, a bit more paperwork, a bit more qualifications that we need.
What is the minimum acceptable credit rating today to get a decent mortgage? And I'm not talking about the lowest rate, but just to get a mortgage at all.
Sure. So and that's kind of a moving target as risk and the coronavirus is rearing its head. We used to be able to go down to 580 for FHA loans under certain circumstances. Now our minimum is 600 pricing. So for conventional loans, if you have a 680 score and above, you're doing pretty well. If if you have below 680 scores, it's going to cost you to do a loan on a conventional side. That's why we would go through an FHA loan for that typically.
And where's that going to cost you? Higher underwriting fees, higher rates,
higher interest rates.
Okay.
Okay. Higher interest rates is what you're going to get. The biggest source of frustration to buyers is sourcing the funds for the down payment and the closing costs. So if you have multiple bank accounts, you don't want to juggle your money from one account to another. You don't want to consolidate everything. You don't want to close an account because we may need to get into that account to source things. So keep the money where it is. No cash deposits, no large cash deposits into your accounts because we can't use cash. The government requires us to track every dime you use to buy a property. The reason being is they want to make sure there's no money laundering involved or there's you're not going to a loan shark on the corner to get the down payment. So we need to source everything. It needs to be seasoned. We need to see it in your bank accounts.
Now, what if we get the mortgage approval process going and I decide to go out and buy a brand new car?
Yeah. That would be a problem. So what
Don't buy a new car yet.
Yeah.
Do not.
Wait till you close, then buy the car.
I tell my clients, if you're going to spend over $500 during the mortgage process, give me a call.
$500.
Yeah, if you're buying something over $500, give me a call. Now, for some people, it may not make a difference with their debt-to-income ratio. And that's a little bit of a jargon term. So debt-to-income ratio is basically how much money you have coming in every month and how much you have going out to your debts.
Okay.
So if you buy furniture for your new house, that may increase your debt-to-income ratio. When they do a soft credit pull right before closing, they're going to see that new debt because we want to know that you didn't go out and make an offer on a house, submit your application, and then go buy a Ferrari because we have to count that Ferrari payment into your debt-to-income ratio.
Hold off on those shopping sprees, everyone.
Absolutely.
Do not max out the credit cards until after you close.
Yeah. And when it comes to credit cards and it comes to debts on your credit report, do not close your credit cards. Do not consolidate your credit cards. If you have lates or charge-offs or collections, do not pay them. Listen to your professional. Listen to your mortgage professional. We will guide you on what you need to do.
That mortgage professional would be him.
Yep. Thank you.
Maybe explain to people what a jumbo loan is versus conventional?
Sure. So a jumbo loan is a loan that does not fit into the box for Fannie Mae and Freddie Mac. It's a non-conforming loan. Okay. And many banks, many mortgage companies have their own products. They also have different guidelines because now you're talking bigger numbers. One default is a big number, so they make sure you're qualified. And it's the same type of process, except that they may want liquid reserves, depending on the investor. They may want you to say, hey, we need, if you have 5 properties, they may want 6 months reserves on all 5 properties. So you need to share when you're getting pre-approved what you have.
Is there a price that jumbo loans start at?
Yeah, if the loan amount is over 765, 400, there's your jumbo.
We're talking about Jersey at this point.
Absolutely. So yeah, if you're in the million range and you're going to be in a jumbo product. I think most people know this, if you're over $1 million, you're going to pay a mansion tax, okay, which is 1% of the purchase price. Right now, your conventional 30-year fixed with 20% down, even 10% down, you're looking in the mid to high 2s, to 2.75 to 2.875.
Okay.
This month I closed my lowest 30-year fixed, and I've been in the business over 20 years, and it was at 2.625 with 0 points.
With no points.
Yeah.
I don't think rates could physically go any lower.
There's a lot more room for them to go up than it is for them to go down.
Yeah, exactly.
Yeah.
Take advantage now.
Speaking of interest rates, what we offer at Guarantee Rate, I offer a float down policy, where if you lock in with me for 45 days or 60 days and then you get your mortgage, now we're 20 days from closing, and the rate's down 0.5 point, right? You locked in 2 months ago, and the rates are down 0.5 point. You're kind of locked into me.
Yeah.
With 20 days from closing. You can't
Yeah.
go start the process with someone else.
Right.
So what we do is we have a one-time float down, where if the rates drop within 20 days of your closing, we will float down to the current market at no cost to you. Okay? Because, we don't want you handcuffed.
We love Guaranteed Rate.
Yeah,
Yes, we
thank
do.
you. We want happy customers at the end.
That's great.
So to close out, the mortgage process is very complicated. It's almost like fingerprints, and a man like Gary can help create a program for you based on your specific situation.
Absolutely.
And that gives you all the flexibility, and that's why, again, getting pre-approved before you start looking for a house, it makes all the difference in the world.
Yep.
So we are going through a pandemic right now.
Mm-hmm.
So the market's actually been booming in the suburbs. You guys are on fire.
Yep.
Tell us more about what's going on, and we want to dive into more about self-employed.
Yep. Okay. Yeah. There's a couple of
what's changing in the
things that are
mortgage
going
industry?
crazy in the
Yes.
mortgage business. So first off, when the pandemic hit, the government made all the banks offer forbearance to everybody who has a mortgage. Okay, where you could put off paying your mortgage for 6 months, a year, whatever it is. That put a problem to some of the larger lenders because they have to pay these taxes and insurance and mortgage payments for their clients. Right. Now they're going to get their money back and they'll be fine, and they're good, solid banks. But it put all the banks in kind of a defensive mode. Okay, and these applications are coming at them like a fire hose, and they have to try and get it to a garden hose because they're dealing with other stuff right now. So if you're servicing a lot of loans, you have a problem in this business. And for instance, there's a lot of people tightening their guidelines where they won't do over 700, they won't do investment properties, they won't do 2 families. And just at the time of this taping, for instance, a Chase, which is a great lender, but if you need to buy a 2-family house or investment property, right now they're not doing it. They're going to come back and they're going to be fine, but right now, so I always, when I have people who've went to Chase and then come to me, I say it's not you, it's them, and it really is, and they're just in a defensive posture. So it's a challenging time to do business. Interest rates are low. The Federal Reserve has the mortgage lenders' backs. They are going to keep the rates low. They can't raise them right now. So it's a great time to be a buyer.
Great time to be a buyer.
It's a great time. If you prepare yourself, it's a great time.
Now, say you had a great job, making very good money, and you're furloughed. So you're temporarily unemployed. You're still on the payroll of the company, but you're collecting unemployment. You don't have so you're technically not really a W-2 employee at this point. Can that person still close on a mortgage? And what if this furlough happens in the middle of the mortgage process?
I've had furloughs happen unfortunately, I've had furloughs happen in the middle of the mortgage process. We do a verification of employment verbally with somebody at your company the morning of your closing. Okay.
Oh, wow.
We want to make sure you're working. And not because we want to blow up your loan or kill your dream. We don't want to be putting you in a position where you have no job and you have a new mortgage payment. Okay. So if you're furloughed, we have to wait. But employment's is a big it's a big scary thing right now. And yeah, I've had people who've lost their job, a few days before closing, and unfortunately, it is what it is. Yeah, it's a tough time.
Right. And I know I have friends, self-employed people who are having a tough time getting mortgages these days.
It's a very difficult time. What the agencies did, what the government agencies did, is they put into place for self-employed borrowers where they need to provide a year-to-date profit and loss statement from their accountant and the last 2 months' business bank statements, and they're audited, and they look at the cash flow. So it can be it can be a trying time if you're self-employed. If you contact me early before you find a house, we can guide you into what you need to do so that you pass that liquidity test.
Yeah, these have been trickier situations.
Yeah, so as someone who pre-approves people, we learn the hard way, right? We learn that life is changing, and all of a sudden I have to start asking some more difficult questions. How has COVID affected your business? And I've had a couple of people who own nail salons, and they were just out of business, and they're collecting unemployment through no fault of their own. But we have to wait until they're back up and running and showing a profit.
Yeah, there's no hiding. Like we
No.
talked about before,
Right.
you have to be honest with all this stuff.
Yeah, well, and the reason why, and you say, well, why? Hey, I have $500,000 in the bank, I have great credit. Here's the deal. The agencies are worried that the companies that made it through the first shutdown are going to struggle if we shut down again. And this will pass. All this too will pass, as they say. It's going to pass, and this is on October 9th, 2020. If you sat down tomorrow, there might be new guidelines.
Right.
And they're loosening up a little bit. And we'll get back to normal just like everybody else with restaurants and bars and movie theaters. Our business will get back to normal. So if I'm discouraging you by saying that, don't be discouraged. You need to call. If it's not me and you like somebody else, call somebody else. But you need to talk to somebody before you say, I'm going to go out. I know I'm in good shape. I'm going to go out and buy a house. Because it's a different time. There are real competitive environments out there right now, okay? I had one deal in Nutley. It was a little Cape, $420,000, had 37 offers on it.
37?
37
yeah,
offers.
so if you're in the suburbs, you have to be aggressive.
Yeah.
And we're talking aggressive.
Well, this is what I want to share with you. When your realtors say you need to go over asking, they are not saying that because they want to make more commission. If you're looking at $20,000, if it's 5%, and the two realtors split that, and then they split that with their broker, that's not why they're doing it. And so know the market you're in, and know when to take your shot. And when you like it, you take your best shot, and you get it accepted. Going back and forth it's just not good. If they do best and final, and you're going against
You get one chance.
30 people. It's over. Try and get that wrapped up right away.
And we've been through these types of situations so many times. We can absolutely help you negotiate and strategize our way through it to give you the best, to put you in the best possible position to actually get the home that you love.
Absolutely.
Thank you so much, Gary.
You're welcome.
This is
Thank you guys for
Thank you
coming.
your time.
Very insightful.
Great.
It was great.
Thanks.
Thank you.
And thanks for tuning in.
See you next time.
See you next time.
Bye-bye.